Hello and welcome back. Jason Sirois with Compass Colorado here. Hey, this is another release of How's the Market Denver, where I bring you the facts and the data needed to continue to make smart real estate decisions in this beautiful place. So we are in the final days of October 2022. We just had our first snowfall yesterday, and I am so stoked to hit the slopes. If you're an Icon pass holder, DM me. Let's hit some runs. Like the weather, the real estate market is continuing to show signs of cooling down and gearing down as we enter the holiday season. Now, some of this is seasonally expected. However, we are seeing an acceleration of this slowdown compared to last year and the year before. So almost all market KPIs, which is a key performance indicator, are trending in a direction that is continuing to favor the buyer's edge in a real estate transaction. This includes median sale price, which is down, total closed homes, which is down, although expected seasonally. Active listings at month end is up. That means there's more inventory, there's more homes to choose from. We have the days on market is up. It's taking longer for homes to actually go under contract. We have the close to list price ratio is down, meaning homes are closing for less than homes are listed for. This is a huge stat compared to last year, where everything was going for above list, sometimes way over above. And another stat, which I don't typically post about or at least track regularly, is the number of homes that are experiencing a price reduction prior to going under contract is way up. We are seeing more price reductions in areas that have not seen a price reduction in 2 years in those highly desirable neighborhoods of the Denver metro. So pretty fascinating that no one is immune to these price reductions as the market is continuing to cool down. Now, something I find so interesting about all of those stats that I just rattled off is that they are driven by one specific unique factor, and that is mortgage interest rates. Nobody is immune to this. It's happening nationwide. So what we are noticing is that there is a benefit to some buyers experiencing these high interest rates, and there is a huge detriment to others. And I'm going to dive into both of those groups here. So let's talk first about who this higher interest rate environment is really bad for, who's getting hit the hardest. Number one, it's anybody who was priced out of the market as a result. Now, these are folks who were shopping for a home prior to the interest rates spiking, and they were already kind of at that tip-top affordability range in terms of lender approval. And then all of a sudden, as rates go up, they have now crossed that threshold into no longer able to buy the home in the price point that they wanted. Now, something that's really important here is, in order for somebody to stay in the game who was at that tip-top approval level, either needs to compromise in size, location, condition, or all three, or improve their income situation, or get a co-signer to basically improve their qualification ability. So those folks are out of the game, and that is one sliver of who is reducing the competition for those who are still shopping. So the second group of folks who are no longer shopping are those who are bitter that they missed out on this low interest rate party that happened for the last couple of years. And they're just retreating to the sidelines and waiting until things calm back down. Now, there are many economic and mortgage experts who predict that we are going to see the interest rates retreat back down. However, getting things back down into the threes was more than likely a once-in-a-lifetime opportunity. So anybody who's waiting for that to happen again, well, it's just probably not going to happen. So the other thing I would encourage anybody, whether it's you watching this or somebody else that you may know, a thought-provoking question is, well, one, what do you think happens when interest rates go back down? Buyer demand surges, that causes prices to continue to rise. So would you rather have a high interest rate but avoid a bidding war? Maybe you're the only offer. You maintain the ability to negotiate after inspection, and you don't have to worry about any kind of appraisal guarantee where, in case the home appraises low, you're not on the hook to bring that extra cash to the table. The alternative would be, hey, let's wait till rates come back down. Would you rather have a low rate, but then be competing against more than one offer? You know, last year we were competing against up to 20 other offers, not an exaggeration. You would not be able to object to anything that is discovered at inspection. It would really be a pass-fail inspection. And then, of course, if the home appraised below your offer amount, you're going to be on the hook to guarantee the seller is going to actually get that in a red-hot market, which we're just coming out of. So for those of you on the fence thinking about, hey, I'm just going to wait for things to cool back down so I can get back out there and shop, do you want competition or do you want expensive money? Because that's really what it's going to boil down to. With competition comes other expensive parts of your contract. Now we're going to talk about who is this high interest rate environment good for? And that's kind of a weird thing to say, I realize, but hear me out on this. So this environment is really good for those who are able to afford the high interest rate. Now, anybody who is out there shopping right now, who gets their offer accepted and closes on a home, they have high hopes that they will have the opportunity to refinance into a lower interest rate within the next couple of years. Now, I should reemphasize that there's a lot of buzz around this right now. Marry the house, date the rate. I honestly can't stand that phrase because there's no guarantee that rates are going to come down. Now, there is a high likelihood that that will occur. As I mentioned, I want to reemphasize, this is the opinion of many expert economists and mortgage professionals, but I'm also not going to guarantee that there's going to be a refinance opportunity. If there is, hey, that's great. So to further illustrate this point, my buyer clients and I, since August, have negotiated over $82,500 in seller credits on $3.6 million in real estate sales. This is absolutely huge. What this $82,500 is allowing these clients to do is buy down their mortgage rate into a rate that is way more affordable. Now, I should note that, of course, they need to be able to afford and qualify for the current interest rate environment, which as of recording this is hovering around the low 7s. But what these folks are doing is either doing a 2-1 buy down where the rate is 2 points lower the first year, 1 point lower the second year, and then back to the market rate the third year, with high hopes, of course, that the opportunity to refinance will present itself. I should also note that in addition to getting these homes for under list price in most cases and this massive seller credit back, these homes are still appraising above the contract price. So major wins happening here if you know how to structure the deals and you have a good lender and realtor combination on your side to make the deals work. So now a message to sellers. We've been chatting mostly about the buyer edge that the buyers have at the moment. So how do you avoid getting beat up and getting a black eye in this real estate environment that we find ourselves in that favor buyers? Well, you need to make your home stand out. Make your home shine, because the homes that shine get the most eyes, which get the most showings, which get the most offers. Staging is a must. An empty home feels a lot smaller than a staged home. Determine, hey, what would a buyer think if they walked into this home today? Would they be really excited about it? Or would they say, it's all right, but the house down the street that's for sale is better. That house down the street is gonna be the one that's getting all that attention. You need to price it right. You need to look at recent sales and look at the list to sales price ratio, which metro-wide is down, right? Homes are selling for under list price, and that has been a trend we've been seeing for the last few months. So be realistic about what homes are selling for in your neighborhood, what condition those homes are in, and of course, whether your home is in better or worse condition. Something else that not a lot of folks do is get a pre-list home inspection. I've got an amazing inspector, Damien, over at Code 4. My recommendation is to get him in there, take a look, have him go through the whole buyer inspection process, but work for you, and then fix all the things that come up. What that shows is really good faith to any prospective buyers that the home is well cared for, that you are operating in good faith and integrity, and you're doing everything you can to ensure the home is being passed over in excellent condition. That goes a long way, trust me. At the end of the day, if you have a fantastic home in a great area, even today, you're not going to have any issues selling your home. Bidding wars are still happening. They're just happening fewer and far between, and only the most show-ready homes are receiving those multiple offers. Now, on the contrast, if you have a home in a less desirable area, or it's a unique home, and the buyer pool for your particular property is quite slim, my advice to you would be to hang on, don't sell it today, make some improvements to the home so that when next year's spring selling season kicks off, typically right around the Super Bowl, you are ready to hit the market as the market is ramping back up. Homes will continue to sell. People will continue to need to sell. People will continue to need to buy. So look, in summary, the Denver real estate market is in a rebalancing period. We have been in a market that has favored sellers so much over the last 10 years, but especially over the last couple of years, that this rebalancing has a lot of people losing their minds and media headlines really grasping on to these low numbers with these high percentage point increases. But we have to all remember to zoom out every now and again. Take a look at this chart here. This is showing the total appreciation in the Denver area from 2009 onward. And this little blip at the top right-hand side that shows the little bit of a decrease in average sale price is what has everybody going, oh my God, what's going on? But keep in mind, this is a blip in the big picture. So if you're gonna buy real estate for 1 year, your risk is quite a bit higher before you plan to sell, that is. But if you're gonna buy real estate to hang onto that home and live in that home for a period of 5 years or maybe more, chances are, if the Denver metro continues to be a desirable place to live, which I believe will remain true, your investment's gonna be safe. To wrap this up, 2 short questions for you. Number 1, what questions do you have about this market? What scares you? What excites you? What type of things are preventing you from taking action? Hit me up, I'm pretty easy to find. Question number 2, who do you know who is thinking about buying, selling, or investing? I would be happy to have a conversation with them and go do a deep dive into their specific goals and building the shortest path towards achieving those goals. Again, my name is Jason Sirois. I'm very easy to find. You just Google my name, text me 303-888-3450. I look forward to helping you out. Hey, be well and stay smart. And thank you for watching this far. Take it easy.